Good day, everybody. Brian here from quantlabsnet.com. Today, in this video, I'm going to cover some big topics that I've been working on for the last 2 days, the results of it, which I'm going to show you. And this is what we're talking about here. Alrighty. So, welcome to our next serious level of AI generation with now options, futures, and something very, very important. Alrighty. So what you're looking at here is a couple of things that I want to highlight here. The three big segments that have been covered. And I'm just getting started here with what I'm about to show you. So in here, I've added 400 new rules to all of my current bots that are strategies to get created, along with they get applied to a, a batch of trading bots and then they get reapplied. It's mind blowing where we're at. So, anyways, in essence, I spent $200 in AI costs. So, I've never spent that much in my life. And I asked the AI for the sort of stuff that I'm showing you now, what would a typical serious trader be willing to pay? So, it goes from $300 to $800 for a serious trader per month. Then, when it comes to smaller hedge funds and prop firms, they'll pay up to $10,000 per month. Okay, so right here is where the value comes in on these trading values. So if you come over into my website, here, it's like get my bearings straightened out. What is going on here is I don't know, many people may not know. If you go under quantlabsnet.com and you go under more and then pick off courses, you'll see this course here. This was developed about 2 years ago, and this pretty well has everything under the sun when it comes to futures and options trading. It's a 25 drip fed uh, course, about 30 days, drip fed each day, futures and options from an institutional point of view. And it's built off of a UCS Davis course, but it's more modernized with AI and the like. Okay. So out of that, when I applied the good old AI to that, we came to a thing here, which was really, really important. So as part of my project, I've been looking and showing. We've got here from the course, we've got all the presentations I fed to an AI. Okay, lots of data, and in there, I was able to generate about each module contains some HTML that everybody wants. But there's about 50 formulas to this thing. Okay. And out of that came 400 rules, trading rules. So I would think that that is in itself as big as more sophisticated trading firms, large ones, banks, hedge funds, family offices will have as a compliance for every time you go through putting out trades within the operation. So it's equivalent of that. So we have 400 trading rules, okay? Um, and that's all part of a simple little PDF that gets created. Okay, 400. That thing to me is the most valuable out there. Yeah. There's 400 trading rules. Okay, so people go, what are they? What do they mean? I'm going to show you that in the next part of the next video. Or this is going to be a long video. All right. So here we're now generating a lot of PDFs. I am showcasing so many PDFs. It's not funny. Okay. So if you're part of my let's say we have two groups that I can show you. We have the public one, anybody can get onto. In here, what we've got here is just I've added options now. Options on futures or futures on options. Okay, there's no single stock here. And let me show you why. Look at what's today. Again, today is June 5th. Look at how far how this is literally blood on the streets in the markets. Everything's down except for the good old VIX. And these are the major markets, okay? So you're looking at S&P down nearly 3%, Nasdaq down 4.2%. When you get Nasdaq plunges because of this chip sell-off, and we're just getting started on that department. We're not factoring in what China's got that can really negatively impact the West. So there's that. I digress. So that's why I focus on futures and options. There's ways to protect yourself and actually thrive and survive in that kind of environment if you get out of the equity only space. Okay, so out of that, okay, we've got all these blabbery um, topics that I've covered over the last day or so. Okay, so that's where a lot of my content goes is into the groups. Again, you just go under more uh, groups. It's somewhere in there. Yeah, right there. And then you'll find all what I'm showing you here. So here we got mega reports to show you. Mega reports. Everything's all explained and blah, blah, blah. Okay. But I can only show so much in a video. So those are the trading rules. So what are we talking about here in terms of the visual reports? Now, hopefully you've watched my latest on the backtesting reports I've got out, and you can suss out a lot from that. But that's only futures only. Okay. So in here, we've got a pile of new reports. We've got these Gen 2, uh, full-on trading analysis with option chain analysis, with signaling, with both futures and options from an institutional point of view. These are so important. And at the same time, applying those 400 trading rules I talked about. So it all starts from the trading reports I've talked about. Hopefully you see my news and how far and deep it goes, where you can look at the positioning of all the major participants, hedge funds, HFT firms, market makers, all the producers, da 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 da. Okay. So out of that, we're able to generate lots of bots, lots of bots. Now I've added in futures. I've added in a futures trading bot, and we're getting about another total about 15%. We can get a pile of um, a pile of uh, a pile of futures only and futures and options. Now, in there, I've also built out a set of trading bots specifically for me and probably other people for micro futures when you're starting out, because we don't have hundreds of thousands of dollars we can put at risk, especially in this trading market. Anyways, so we've seen the trading report. We haven't seen the profitable rules. We haven't seen the portfolio. This is a lot more detailed now, and we got the signaling and the backtest reports that I've shown and the trading analysis. This is the first cut of the original bot. So we got the news. Okay, well, I'll show that because a lot of people probably want to see it. And here it is. Okay. So again, I've shown this many times on streams. Just covers everything in the in the futures and options space. Okay. I'm not going to go into detail on that. Okay. And then where we go from there is we start to add in, let's take a look at the trading analysis now. Okay, so these are some of the trading bots that can come out of that new session. So we have 12 of them, rules enforced. Now, 398 rules enforced across all of these bots. Okay, so can you imagine? We have original bots that get created. We create those with AI, and then we add in another generation, a second generation of those same bots that have been modified with these rules applied. Okay. So you can see here, these are the type of bots we're dealing with: crude oil, gold, safe haven, put spread. Of course, it's options related. S&P 500, copper, da 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 da. Okay, it goes right across the space. Estimated trading costs. Okay, this is at a full portfolio, we can call it, in one snapshot of news. Okay, so as I said, we got futures, futures only, number of contracts. Um, it just goes on and on. Then we get into the capital requirements needed for each of these. Okay, I could probably create one for micro as well. That would be very helpful for little traders that are starting out. I'm part of that as well. I'm not going to lie, but hopefully one day we'll get to these levels as well. Okay, so we have estimated costs. Um, and then if you're going to apply this type of set of strategies and portfolio, if we had $126,000, now this is AI, and I've always said this before. These um nice looking guidance is just that. It's nice looking. Don't take that as a rule. Okay. What I'm showing you is for just demonstration purposes, but this is what we're talking about here. So what it's saying is we can get an average win ratio of and again, oh sorry, that's the annual return at 60%. Again, anything over 2 when it comes to Sharpe is very good. So 2.18, and that's in this tough market right now. Okay, and then a win ratio of 60%. So here's all the different bots. Here's all the different metrics, blah, 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 across the span of the different portfolio allocation, projected Sharpe ratio. Now, then we have projected versus actual. So part of the process that I'm showing you is it's quite sophisticated now. It's actually downloading data, market data, both options and futures from interactive brokers. And if it can't get anything it needs, it's going to download it from Rhythmic. Because you got to remember, it's all from the CME, so it's all one source. Okay, and this thing is so sophisticated now. I'm most likely going to add an ICE because as the markets get bad, there's a lot of instruments that look pretty interesting from the ICE exchange, including dollar, Brent crude, and so on and so forth. Okay. So again, here we have projected risk. Okay. The Kelly fraction. So this is now risk taking on all your positions. Okay. And then we get into all the portfolio metrics. And I keep saying this, the most important job in the world of trading, if you want to be paid the highest, you want to be a portfolio manager. If you can go beyond that into, because portfolio managers can make anywhere, let's say $1 million annually. But when you get into the multi portfolio manager, then you're on average getting up to around $20 million. That's what stats are shown, and I put posts on that. Okay, and then we have all these different strategies, and then we have the most valuable thing probably in the world of trading is the options chain data from futures market. Not, and this is very critical to know. We're not talking about options on stocks. We're talking about options on futures. People pay top dollar for that. So I've tried to do my best to grab snapshots. Once you start streaming it, it gets beyond expensive and actually it's very intensive on any computer. Okay. So here, you can see all the different signaling. So we'll cover that in greater detail as well. Okay, and you can see we're on page 27 here, so I'm going to go quickly through it. But you get the idea, okay, of where the money's best made, and this is important as well. Performance ranking, back tested. Okay, I've been talking, oh, simulation the only way. No, no, I'm totally wrong on that. Back testing is still a critical part of the overall algo trading, no matter where you're at, what level. So in here, where it's talking about is the direction, if it's long, long, short, whatever. And this is the source is an important one as well. Okay. And then we have here all the metrics that we're used to. So you can see here, I'm now calculating backtest. And then there's some option ones where, in because there's other hard to get the sources, these can be estimated as well. But there's actual back testing taking place here, like real data. Okay. Um, and then it breaks it up into different categories, like if it's agricultural, crude, oil, crypto, FX, metals, natural gas, and so on, treasury, volatility. And the volatility is the very interesting one. As I shown earlier, when things go bad, you want to cover the movers, and you can see the down ones are doing bad except one, VIX. Volatility index that you can trade in the futures and options market. People don't know that. So, yes, that can be traded. Okay. Just remember that. It's one of the beautiful things about um, when it comes to futures and options. Now, the big one that everybody wants to know about is Bitcoin and Ethereum. Look, I've got nothing against crypto, but lately it's been performing pretty bleak. Okay, even strategy. They're saying strategy, Michael Saylor's in trouble now. He may be a bounce back, but right now, not looking good. So Bitcoin's out there, but it's not performing, so you don't see it in the reports. They're not profitable right now. Okay, and then you get into some shorting, which I personally don't do. But again, you can see here the euro, again, Forex. There's also DXY, which is the US dollar index as well, which can be probably pretty good as the markets deteriorate. I'm pretty sure they will. So you can see here we can break out the net P&L of each of these. Again, back tested using real market data. On and on and on and on and on and on it goes, right? This is just one report. Okay. It's just absolutely like where it's at. And this is all courtesy of AI, as I said before, will improve something that you don't ask for and just adds it. Okay. So these are the results of that. And here you can see some of the rules that I've talked about as well that are being applied. And if it exceeds certain parameters as part of the rules, very important from a compliance standpoint. But now we have internal compliance coming from those 400 trading rules. And that keeps you safe. So anything you see, obviously, here is telling you, yeah, you're breaking those safeguards, which a lot of I can guarantee you, probably every single trader doesn't consider that. And more importantly, which makes it even more dangerous, is the prop shops don't enforce that, nor do any of the institutions. Anyways, enough of this report. So, wow, it's just so much. We have the back test, which I've shown before. Um, so let's take a look at the portfolio here. So this is the overall portfolio we've looked at. And again, everything's in for educational purposes, not actual financial advice. I'm just saying that to protect myself. Okay. And again, here's our profitable strategies. Okay. So in here we've got crude oil, gold, euro dollar, natural gas, potentially Bitcoin, and S&P 500. Well, actually, it's all of them. Sorry. So here it does a comparison. Okay. Costs on a round trip on the exchange, including, I believe, the margin requirement, the risk metric as well. Okay, so that's important. If you've seen any of my social media, especially on LinkedIn or Substack, you'll see that what was posted wasn't an actual strategy that matters. The risk management of all this stuff is the strategy itself. Okay, and that comes from the course and the trading rules that I've shown. Okay, this is going to be a very, I keep saying, anyways, I'm just going to plug along here. Okay, so here's the rules. These are some of the profitable rules, what to look for. So again, profitable bots are 7, and again, estimates, okay? Um, so here we got futures and options, the P&L, the win ratio, and the Sharpe ratio, okay? You're going to strive for 2, okay? So in this case, we got the ES 500 with the VIX, but you also have to factor in your drawdown as well, okay? Your max drawdown. It's very important to know that. So anyways, we have here, in this case, the crude oil backwardation calendar spread, 54% win ratio, Sharpe a 1.95. That's pretty good. And it's ranked in order what it thinks is the best. Profit factor 2.55. So if you're in the world of trading view, that's a pretty good profit factor. Anything over 2 is good. Now, this is what you got to be careful of. All these returns are just way off, okay? That's probably not realistic, but that is something to be concerned about. So you got 37 trades, and we'll look at that in other reports. But here's the rules. Here are some of them. So these involve position sizing, leverage and margin rules. Okay. We got risk reward rules, stop loss rules. Okay. Personal circuit breaker rules. So those are internal to the algorithm or to the strategy itself. Entry rules, a lot of them, exit rules, and then options and futures now. So now we're adding the options. These are same rules, same data set. Options on future rules. Greeks interaction rules. Black Scholes, because Black Scholes is the fundamental of all options. Okay, and then we get into the hedging rules, optimal hedging, because that's what you want, advanced hedging rules. This is all from that course. Advanced option strategies and some of the recommendations. Put call parity, which is very important. And the synthetics that come out of that for your strategies for the really advanced, what the high frequency trading shops will do, but you'll never know about that. And then we got the trading psychology rules. Those are the more higher level human based rules. Trading plan rules, performance metrics. And look what happens. Each and every strategy will have those list of rules. Okay. So they get enforced, but it's hitting up every single one of them. And what you're seeing here is just small potatoes. So there's one sample of all these rules. Okay. Applied to every strategy. And that's why when you look at, you have the original stuff, and then you have Gen 2, which is the trading bots, okay, that have been reapplied with all the stuff I'm showing you, with the rules included. They're all applied, and another batch of trading bots come out of that, both for, as I said, micro futures, and the other one for full futures uh, and options contract. So much. Okay, so um, some newer stuff here. So we have the signaling, okay, rare. So there's not so much. So these are all the different profitable strategies, and it gives you all the rules. Integration signals found, blah, 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 blah. Signal application context. So this is getting really deep into the more quant analysis stuff, but it's not deep, 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 deep quant analysis, okay? It's giving you actual figures, okay? And suggestions. All the signaling here, and it's color coded as well if it's profitable, like this one, natural gas, summer demand, calendar spread, blah, 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 blah. All of the signal integration based upon real current market data and market conditions built around that. You can see why this is very valuable. All right. So continuing along. So this is the really meat and potato of it all, the chain analysis, the option chain analysis for all of these. So it goes out and it will download all of the uh, option chains at that point, and it will also suggest different things. So here's the put and calls, the strike price, the bid and ask. And this is really important. Why options is very important, because you will not see this in any other asset class. The key to really being successful is to see what's going on in the markets in the future. That's what options provide you. A couple things here you can take away is the implied volatility, all of the Greeks, okay, when you do your analysis, and more importantly is the open interest, which I can add to this in these reports as well to showcase the demand on these different strike prices. This is why it's so key to be profitable in the world of trading, and specifically in the world of options chains. So you can see here some of the suggestions here, how it's interpreted for this particular long calendar. Futures mid-range with the price, spot, direction, ATM, IV, okay? And it's also including the risk adjustment with the Kelly criterion, which is kind of pretty standard or a form of it. And then we add in the delta analysis as well. High delta calls, ITM, in the money, consider synthetic long. Theta decay works against long option holders 2 to 4 weeks. Timeline must overcome theta. So basically, what that means is you're in from the news. You see what the institutions are doing and what particular institutions, and just sometimes, well, I shouldn't say sometimes, but many of the times, it tells you how much puts, calls, futures that they're buying in volume, and that's put into the news. So knowing that, we can then take all of the advanced AI that have applied into these reports to give you a much more quantifiable adjustment on future calls and what you could do as well. Now, again, this is just not investment advice, but this is now working with real future outlook data, okay, that you can work with. So here we got gold, okay? So now I could go on, and it's applying, as you can see here, implied volatility in Greeks to gauge macro volatility regime applicable. And again, this is really important. Why? Because this right here, when everything's up and down, volatility wise, you can properly gauge it, knowing the implied volatility moving into the markets based upon how the option chain data is looking. Very, very critical if you want to stay in this game of trading. And more importantly, you need to understand this for career if this is where you want to go. And if you want to know your stuff to get into the lucrative part of the world of career, like I said, multi strategy portfolio manager, getting into the $1 million packages, then yeah, it's more than worth it to analyze. But you get the idea of where this is going. Okay. So continuing on, and that's applied to each quote unquote profitable strategy. I'll show you how that's determined as well. So out of that, let's look at the next batch. So we looked at this, we looked at the profitable rules, we looked at the signaling. Now, this is important. Okay, the back testing. I've shown this before. I had my last stream focusing on this. So this is using all of the back tested 4 hour time frame of real market data from the CME via interactive brokers. So here's all of the data. There's analysis done as well. We have here some important information about the different alternatives that based upon risk, leverage, da 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 da. Okay, so this is kind of important as well. All the metrics. This is actual. Remember, I said it's AI estimate. There's also actual as well. Some of it is kind of far off, which is not fine, but this is just general guide. And I'm going to show you the better way to gauge it. I probably will address this in future modifications to kind of make this more realistic. This is still one of the disadvantages of AI because the projections can be so far flung. But again, we still have the news drivers that are important that will drive these kind of calls. We have here all the different things that could happen: geopolitical, price, institution. So you can see here, this is what they're doing for oil again. So now they're thinking of shorting. It looks like Bitcoin's part of that. Hedge funds adding an expected and actual outcome. Okay. So strategy aligned with the bullish capture or bullish catalyst and captured the predicted move. So this is going back into history as well. It gives you a grade. So here's the drivers: high drawdown. Okay, concentrated losses. So here's, I mentioned this before, the scorecard. Okay, here's the volatility outlook, bearish, with a 20 bar range. Okay, and then we have the ATR, stable conditions, so on. That's particular to this strategy and the trading rules of that strategy. So you can get different parameters used for each strategy. And then again here, these are all your metrics as well. Again, these are just like, I don't take them seriously. But this is where you can easily verify if this is real or not. So in this case, we're going in June. Again, today is June 6th or June 5th. Okay, so it's about a year, 4 year data. You can see the price here. This is what I keep stressing. We're looking at not the asset price. We're looking at the results of the price of this asset and its portfolio, how it's performed with these rules, with the strategy applied. So this is not the actual price of the strategy. This is the effect of the P&L of the strategy against, in this case, uh, uh, oil, CL, over the last year, if we applied it. So you can see here, if we start applying it in this range, we'd start making money if we knew about it. So here is your maximum drawdown. This is what you're looking for on risk, and you generally don't want to be more than negative 15%. Okay, so again, position sizing built around Kelly criterion or half as well. Okay, the risk, minimal, tweak, edge, or high drawdown risk. Okay, so it's measuring what is the edge here. Okay, and then this is really what's important here: the monthly returns. I think this is kind of the more important thing to really visualize. So if we applied this whole strategy for the year, we'd be in green. Okay, May, no, but in June we're starting to see some profit here because we're on the 5th of June. So we're kind of profitable. So you look at it, go, maybe I should apply this strategy. And again, here's the last 20 trades, historical, using the trading rules, AI estimates. This right here is the important part. So again, these are the rules that we can apply, the futures and option rules to this strategy. Okay. This is a PDF, so I'm going to show you. So we're going to apply the same thing to each and every strategy. So I'm going to give you this HTML version of it. So trading bot backtest right here. Okay, so those trading rules can be looked at again within this call it report right here. Okay, so these are all the rules right here. So these can be all looked at with what I showed you before. Okay, and those get applied to the strategy. And then there's going to be, in this case, I think there's 7 in total. So they'll have their own set of rules applied in the new bots that I'm going to show you in the Gen 2 or second generation of bots. Okay, but we're looking at the first generation of the reports. Now, the idea of the idea of having a set of bots applying options futures with a set of rules, the idea of generating a second generation was suggested by the AI. I thought, yeah, let's do that. And you can compare the back test of that set of bots, the second generation, against the original set of bots. And there's also a comparison you can look at as well. All right, so we'll see that in a minute. Well, a couple of minutes. So we've shown you the signals, the chain analysis, the portfolio rules. Okay. Now this is where it gets interesting. Now I've talked about the second generation. So in here, we've got the original set of bots here, all segregated out. The losers, or I shouldn't call them losers, but they're just not worth looking at. The potential bots, and I'll have to readjust my front end to only focus on the potential bots. Okay, so this is, oh, let me go back here. So what we're looking at here is the micro futures. So in my case, I only want to trade micros. So there's only so many potential bots to trade here. Because here's the thing. When you're only focusing on micros in the futures market, you have a very small subset of strategies to work with and options related to trading rules as well. Okay. So, but once you start to build out an account size here, you'll see we have more potential bots to work with because we're expanding the availability because we have a larger account size. We can take more risk and we get more options. So now we increase our set of bots or strategies to work with because we have a much bigger trading account. So you saw the total amount needed for the proposed amount needed for these set of strategies. You're looking at about $150,000. It could be as high as a quarter million. So if you have a big enough account at 150 grand and you're willing to put all that at risk to get the kind of projected returns and stuff, uh, you'd be running all these trading bots against a $150,000 account. Again, that's just projected, and then there's actual. That's why we're doing the back testing now. So you can see here we have all the different potential bots here that we could run or strategies. Again, they're all Python. Okay. We have a set of losers that we should not even care about, really, all Python. So that's all segregated out between the micros and the futures. Original trading bots or strategies before we applied all those 400 rules in the futures and options market. And here's all the historical data that goes along with it. Again, that's just from CME via the interactive brokers. Okay. Now, here's the thing. I'm only been only up until this point, been really only focusing on the CME exchanges. Okay. So now for an extra maybe 15, $20, I can add in the ICE. Okay. So now I can add in the DXY and some other uh, the other instruments found on the ICE. So I can add that now as part of my analysis. Okay, so as I said, what I've shown you all is that original set of bots, all up until that point with no trading rules applied, out of those 400. So now we're moving into a totally different ball game. We're now applying a set of rules which will adjust the trading rules into the trading bot strategy Python code, and this is what you get to see here. So I'm going to load you up a bot plan from that. Okay, so there's going to be a smaller set of bots that come out of that. Okay, but over 400 rules or potential rules have been applied. So we have VIX. Um, we have what do we have here? Micro Nasdaq. We have um, micro gold again. Micro, because that's kind of like what we're primarily doing. Micro euro dollar and so forth. All right, so that's what we now have. Okay, so we have a set of bots related around the second generation of bots that have been tweaked with the 400 rules applied. And that's for safety reasons. So we have a comparison between the two. Okay. Um, and I've also done a generational back test as well between the second generation with all those rules applied versus the original set of bots. And you can see the back test performance. Plus, there's also an analysis done on the profitable bots. So let's check that out first. So here we've got 11 bots to choose from. Average Sharpe 2.88, very strong because we applied those rules. So again, they get readjusted. But look what happens. Our Sharpe ratios kind of jumps a lot. Max drawdown drops a lot. So we're now optimizing because of these trading rules. We're optimizing and doubling our Sharpe ratio, which is pretty mind blowing in itself. At the same time, we're cutting our max drawdown in half. This is the improvement we get by applying the second generational, or sorry, the 400 rules against the second generation set of bots. Okay, so this is a combined ES, S&P 500 against the market VIX with an adaptive strangle. Okay, this is the improvement we're getting. So now we're getting into what the hedge funds or the high frequency trading shops would be doing by applying all these rules they have internally in their compliance for trading rules, and then not just only boosting, like doubling their profit potential, but also cutting down their risk on the downside protection as well. Look at the profit factor. That's massive at 3.5. So these are the improvements that we've applied to this just one strategy. Switch from foot back spread to an adaptive strangle. That's from the first plot, the Gen 1. Added VIX triggering wings. Okay, there's the parameters right there for tail risk. So the Gen 1 did not have dynamic hedges. This is incredible. Then we have the micro ES delta hedge reduction using gamma exposure by 40%, where the Gen 1 did not have future hedging at all. So this is how we're achieving this. Okay, how do we do this with the oil backwardation calendar spread? Okay, so again, look at that win ratio again projected. Well, look at the Sharpe ratio; it's pretty strong at 2.85. More importantly, within that 15% drawdown, max drawdown. And look at that profit factor; that's jumped a lot, 2.55, 2.45, with a win ratio of 72%. Now, people go, well, how do we know that? Well, I'm going to show you the back tested against these type of strategies in a minute. So how do we improve this with the second generation applying the same 400 rules? Now, look what it did. This is all again AI. AI did this. Added out of money put spread, okay, to hedge tail risk from the Iran US escalation. We had that yesterday, okay? Gen 1 had no option overlay. We tightened the stop loss from 68 to 72 using 2.2 ATR, and that's dynamically created optimally by the AI using real market data. Very important, and that's going back 1 year on the 4 hour time frame. Gen 1 fixed it at 15%. Okay. So we reduce the contracts from 5 to 3. And that's another important factor if you learn in the course. How many future contracts should we be buying? And then this is to comply with the rule of VIX if it's greater than 25 sizing rules. Gen 1 ignored the volatility scaling. So look at the volatility in itself. So now, if this continues, this deterioration continues, guess what? That VIX continues to rise and go up. So now has been this bot has been applied with that consideration in case the VIX goes beyond 25. This is what again the HFT shops are doing. This is what the hedge funds are doing, and you wouldn't know about it. Okay, so then we get into natural gas and blah blah. Same thing. Okay, that's the difference and why we're able to cut risk on the downside, but upside boosts the upside as well. That's absolutely incredible to know that. Okay, let's see what else we got going on. Okay, so we know, and that's only on the profitable bots. So out of that, knowing we have this second generation of bots, what we can do then is just focus maybe top two performing and put it into production. Because we're going to have lagging bots that are like trading like dogs. They bring down your overall portfolio process or portfolio performance. Okay. So again, we talked about the back testing. Okay. So let's take a look at what it does. So with the back testing, okay, so there's a lot of blurbage, average Sharpe ratio. That's okay. Okay. All simulated, all blah, blah, blah. So we have a micro Bitcoin now. We have some stuff. We got the equity curve as well. Okay. And these are the modified bots. This is what's important here is to understand the monthly returns. Okay. So I'm just showing you some sample output here. So here we got a micro euro dollar. Okay. These are only for the micros. Okay. Again, you can see the improvements here. And this is real market data and the performance of it using these trading rules against what I showed you on the micro, was that the micro euro? Micro, believe, yeah, micro euro dollar and the micro Bitcoin as well. Just some of the improvements using real market data. Okay. Blah, 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 blah. Okay. And then again, you can see all the same as before, all the trading rules applied. Let's check out the next report. Okay. So again, there's another set. I think we just saw that. Yeah, there's a lot of tweaking I need to do here for sure. But I'm just showing you the potential on where we're going with this. Okay, so let's take a look at the comparison now between the generation one, the original bots, and this new tweak 400 rules applied. And you'll see the difference here. Okay, so here we have 7 bots. Now we're ramping up to 7 in the second generation. 2 bots. You can see the difference here. As projected, the original set of bots, again, estimated, okay, at 257,000, but the second generation with the new rules we've applied, we're up, doubling basically 285. Okay, so here's the difference. Gen 2 wins. This is on the net P&L, profitable bots, average Sharpe, win ratio, average drawdown. Second generation of bots win. Bravo. Okay, so again, just looking at some of these, we talked about the CL backwardation calendar spread. That would have made 90K. Applying the rules, we've doubled it, more than doubled, 200% or 200K. And you can see the difference. But here's the violations. Well, we've improved it by improving those violations on those set of rules to this. Using all of these, switch from backward adaptive Gen 1 was directional only. We added a VIX triggered wing, blah, blah, blah. I've already mentioned that. Then we have the gold. Okay, this didn't improve much. Okay, but let's go through this. Um, it's pretty incredible what we got here. The difference. Um, let's see here. Yeah, so we have here Natural gas, 14,000. That's for the original set of bots created. Whereas here, um, natural gas, I think in this case, yeah. Oh man, the difference is huge. 14,000 profit to 68,000. Incredible. And here's what was improved. Mind blowing. Absolutely mind blowing what we're showing you here on all these improvements. And this is why you need to know a few things here. Okay. Um, is this is important to know. What I'm showing you, what I'm showing you, I want to maximize my lecturing. Um, so here's the thing. If you want to improve your profit, okay, in a bad market, really bad market, look at what you can do. If you took, okay, this kind of course that I'm talking about here, um, this one right here, look at it. Covers all the topics we cover in the trading rules, all 400 of them, let's say. And the difference between the original and when you apply the rules, what it does, it cuts down your risk potentially by half, and it could double your profit by applying all of these rules. It's an absolute difference, okay? But now we've automated it. It's all AI generated, and the difference, and that what I showed you were back tested, meaning real market data, okay? Real market data. That that is absolutely incredible. The difference on some of those strategies or bots, just by applying things it can see, as I said, um, as well. That's mind blowing. That is absolutely mind blowing. Let's get back to the screen here. All right, so let's continue along here. Yeah, so now we've got the Gen 1 versus Gen 2 comparison. Okay, so I'm just going to randomly choose another one. So you can see here we got 59 pages here. It goes to great length. Okay. I don't know. I could go on and on and on about it. So here's the thing. Here's what I want to show you. Because we're able to do this with AI, a couple of things. These are just now people need to be aware. If you really want to get on board with this stuff, okay, what you got to do is go to quantlabsnet.com. You get on the email list. Okay, that's all I can say. Get on the email list, and then here you can get and subscribe to the email list. Okay, depending upon if you binge all the content to get these kind of benefits, would be wise. Okay. But this is the important thing I want to ask the AI to say, okay, Mr. AI or Mrs. AI, whoever you want to believe, um, what is the value of these kind of boosts and learning and reports? So this is what it said. This is the true value from what the AI said. Okay. So if you're a professional, serious, independent trader, okay, you'd be expected to pay $300 to $800 a month for what I'm showing you. Okay. And what they're paying for the daily future strategy report, macro flow, option chain analysis with the Greeks and skew, portfolio term sheet. So when you look at the comparables, again, this is from Gemini AI. So we get macro ops, Hedge Eye Pro, or advanced option flow tools. Spot Gamma Pro Tier 1 app Alpha, typically 150 to 400 a month. Okay. Combining them with the specified future spread setups justifies a premium. So what this AI has done, Gemini, has gone out and looked at what the market is saying for this type of stuff. This is what you pay. Okay, so now it's saying with all the unique stuff that I'm bringing every day that's generated, plus back tests against real market data and a lot more. I'm sure of it. You can pay up to $400. Okay. So now then you move up, you get the Algorithmic Trader or the CTA Pro data cost. Now it's very interesting. $1,000 to $2,500. Okay. per month, per month. That's very important to understand that. Because your pipeline has these two things, the pipeline summary and the bot plan, okay, where I've shown you all the different bots in JSON, you're actually generating Python scripts. Now, I don't want to do that, but if I did, it wouldn't be as low as 1,500 a month. The exact execution parameter, this elevates the product from a newsletter to what they call a trading system as a service. So, what are they paying for? Now, again, look at the cost here: 1,000 to 2,500 per month, per month, per month. Okay, from Gemini AI. What are they paying for? You're getting a daily JSON parameter update, the back test metrics, the Rhythmic API integration signal, which I can't do anyways because it's against the terms of service. So don't expect that from me. But because I'm on Interactive Brokers, I don't have those restrictions. They're paying to feed your quantitative models directly into their execution engines. So would I do that? Maybe for Interactive Brokers, but we've also talked about the problems of Interactive Brokers on the stale orders and all that, and how the HFT shops love picking those off. Okay, but anyways, let's see what the comparable market is. So again, this is getting down to the nitty gritty that less and less institutions or companies are offering this type of service. So professional quantitative signaling, feeds, specialized API access, or algorithm strategy license easily, easily command 1,000, 1,000 to 3,000 a month. Okay. So now we're getting to institutional. So now we're talking about institutional or the pro shop enterprises. This would be 3 to 10,000 a month. Okay. So if I was to take this upon myself, here's what we're doing. If sold as an enterprise license, prop trading desk, or a small hedge fund with multiple traders across macro research and a quant desk that ingests all of these so-called API feeds and the JSON, what are they getting? They get 398 rule risks management framework I've talked about, the 400 from all those trading rules. That's my golden egg, my golden goose egg or goose golden egg. Okay, again, that comes from this course here. So what's going to happen? That's going to go up price because of this. But continuing along, okay, so you got this set of rules: 400, cross asset correlation matrix, and institutional flow narrative. Interesting. When we get now into the comparables, what are we talking about? BCA research, TS Lombard, or specialized quantitative data feeds. Option metrics run well into the $10,000 annually. Okay, so I could offer that if I wanted. So here's the value of what they're getting. Holy Grail. This is what everyone wants. Long highest value in your package, actionable spread trades. For instance, these right here, long 10-year ZN versus 2-year, blah, blah, blah. Most retail services just say buy call on Apple. No, no, no. You're getting, I've just shown you exactly the improvements with these trading rules. Most retail services just have the buy calls on Apple, providing exact contract months, the ratios, plus the Kelly Criterion position sizing for futures is highly specialized. Boom. Okay, of course, there's the caveat. This is where I have to be very careful. I don't think I'll ever offer this as is right now, but I'm just showing you the value, what could be charged. So if I was to integrate it with the signaling TXT, which I've shown you, or the signal uh, report with a live rhythmic connection to pull actionable data and P&L is based on backtests. So I'd have to make that live. Again, I can't do that because I'm going against the rhythmic terms of service. So that's not going to be possible anyhow. Can't do it. Now, again, can I do it with interactive brokers? Somewhat, but maybe I could find a better feed, a market data feed. I don't know. But just saying, to command the upper end of these high price range, 1,000 a month, you would need to publish. Here's the key. Here's the key: a verified live forward tested track record. I've talked about that. That has to be verified by a third party. Very, very, very important. third party auditor. We've talked about some of the providers that do that, or a live brokerage statement. Okay, that could be from Interactive Brokers. Proving that any of these amounts backtest the P&L translates to real world alpha without being destroyed by slippage and execution latency. Okay, so that's where we're at. That's where we're at with what's been developed. And as I said, we're just getting started. So all of this is just data, reports, and action plans on what can be traded. The other key thing that a lot I've not really stressed here is this. What I've not stressed here is this. Remember what I said about the code? You kind of forgot about that, didn't you? You can actually get in source code. I could release that. Or better yet, better yet, better yet, better yet, better yet, I can make that available through an API. Hey, I could do a trading copy service as well, but I can't do that where I'm located here. I can't because we're regulated to death. But you see the potential here of where I'm at with what's being provided. As I said, we're getting started. We've got the code, we've got the data, we got the blah 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 reports. Now, what I could do is, if you remember my dashboards that I've got, what I could do is put those as a software as a service, or in this case, trading as a service, whatever they want to call it, and provide that as well. Um, that's one option. And more importantly, I think this is more important. If you remember in my dashboard where I have the bot control, I can turn off certain bot strategies, whatever you want to call them, with those green buttons, and then toggle them on and off. What happens if I take an automated process that can be built again with AI, and that will turn on and off all the different profitable trading bots for the day, for the however long, X days into the future, and have that automated process turn them on and off based upon what it sees in the data, basically like an agent. That is very possible as well. So that's the next steps that we're going to go. Now I can build this out for myself, and then I can figure out, well, what do I do with all this data for all of you watching? How much are you willing to pay? I'm showing you the value of what's out there. So I can't stress enough with the current pricing that I got. It's a joke. I'm undercutting myself to the T. I know how to reach these firms easily. I can do that by targeting all my videos and just on the ads alone that I'm planning to do. So my point here is, for anybody interested in these sort of things, you got to jump on this now to sign up. Okay. And I've not talked about all the coding projects I already got in the can that I've already processed. It's just kind of crazy where you can go with all this. I just wanted to highlight that. So, as I said, it's looking pretty good. Anyways, that's a whole hour of wonderful chit chat and upgrades. But I'll be coming back with more things to show you down the line. So my name's obviously Brian. Like and subscribe. And more importantly, get on my email list over at, as I said, over at the quantlabsnet.com right here. And then sign up on the email list. Because without that, without you getting onto that, you get left behind. And I've shown you where the market's going. It's going to be extreme down moves. And there's ways to improve that and circumvent that. As I'll leave it at that. Thanks for watching. Have a good day wherever you are. Over and out. Bye bye.